ESG investing is widely seen as a way of investing sustainably, where investments are made with consideration of the environment and human well-being, as well as the economy. So if you are interested to invest in companies whose mission is to accelerate global progress towards a more sustainable future, stay with us till the very end. The first company we're going to talk about is Target Corporation, which is a Minneapolis-based general merchandise retailer offering everything from perishable and frozen goods, dry grocery, to electronics, home improvement products, and household products. Target Corporation currently pays shareholders an annual dividend of $3.6 per share with a 1.5 dividend yield. TGT Stocks has offered more than 103% returns to investors in the past 12 months. Target Corporation is one of the giant retailers that offers solid recycling solutions to help the environment. In 2020, the company introduced a recycling kiosk in Target stores, which has prevented thousands of tons of recyclable plastics from ending up in landfills. Target Corporations installed solar rooftops in more than 500 stores and distribution centers in 2019. The second company we're talking about is Tesla. On top of being a market leader in the EV market, the company also promotes the use of solar energy as it manufactures and sells solar panels and solar energy storage products. Tesla, TSLA, produced and delivered over 200,000 electric vehicles in the second quarter of 2021. Tesla posted record revenue and profits in the third quarter. The record results were driven by improved gross margins of 30.5% on its automotive business and 26.6% overall, both of which are records for at least the last 5 quarters. Automotive revenue rose to $12.06 billion and costs of automotive revenue amounted to $8.38 billion for the quarter. Tesla also generated $806 million in revenue from its energy business, which combines solar and energy storage products, and $894 million in services and other revenue, which includes vehicle maintenance and repairs, auto insurance, and sales of Tesla-branded merchandise, among other things. Let's take a break from investing because there is another way you can make an impact. Team C's mission is to raise $30 million and has pledged that 100% of the money raised will go directly to their non-profit partners, Ocean Conservancy and the Ocean Cleanup, in order to remove 30 million pounds of trash from oceans, rivers and beaches. And we pledge that all the money we raise with this video from start till the end of the campaign, which is on January the 1st, will be donated to Team C's in order to support their effort. So share this video with your friends to spread awareness about this campaign that aims to do its part in saving our oceans. The third company we're talking about is Next Extra Energy. Founded in 1925, the company is one of the fastest growing utilities in the US. The company is investing heavily in expanding the country's clean energy infrastructure, including building more natural gas pipelines and power plants and developing renewable energy sources like wind, solar energy, and battery storage. The renewable energy company is actively investing in energy infrastructure in the United States, with a total investment of $14.6 billion in 2020. These investments are paying big dividends for investors. Next Extra has grown its earnings and dividend at above average rates, which is powering market-crushing total returns. The company distributes an yearly dividend of $1.54 per share, yielding 1.82%. The stock has gained 17% over the last 12 months. The fourth company on our list is Taiwan Semiconductor Manufacturing Company Limited. In 2019, the company cut 17% of its greenhouse gas emissions and 65% of fluorinated greenhouse gas emissions, making it an industry leader in low-carbon manufacturing. In addition, the company purchases renewable energy and installs solar-powered systems in its facilities. TSM currently pays an annual dividend of $1.81 per share with 1.54% dividend yield. The company has offered more than 107% returns to investors in the past 12 months. Third quarter revenue were $14.88 billion, which increased 22.6% year over year and increased 12% from the previous quarter. For Q4, revenue expected to be between $15.4 and $15.7 billion, with gross profit margins expected to be between 51 and 53%, while operating profit margin is expected to be between 39 and 41%. On top of the list is Microsoft Corporation, which is one of the carbon neutral leaders not only in its industry but also globally. The company released its initial environmental sustainability report in January 21, announcing a $129 million investment in funds and organizations working on carbon reduction, water management, and circular economy innovations. This investment is part of Microsoft Corporation's $1 billion Climate Innovative Fund, announced in 2020. The company currently pays its shareholders an annual dividend of $2.24 per share, with a 0.8 dividend yield. Microsoft stock has offered more than 62% returns to investors in the past 12 months. Microsoft Corporation announced the following results for the fiscal year ended June 30th, 2021, as compared to the corresponding period of last fiscal year. Revenue $168 billion, meaning an 18% increase. Operating income was $69.9 billion, an increase of 32%. Net income was $61.3 billion GAAP and $60.7 billion non-GAAP, an increase of 38% and 37% respectively. So if you're interested in investing and also want to help face the existential crisis of climate change, consider these companies as good long-term investments in our planet's future. You can also support Team Seas by sharing this video with your friends to help them on the mission to raise $30 million.